welcome to Global Market Outlook 2016, a special series that we bring to you each year from the City of London, speaking to a lot of prominent fund managers and market speakers about their outlook into the new year. Joining me today on the special edition is Nikhil Srinivasan, Group CIO at Generali. Nikhil, it's great to have you again on the show. What's the outlook looking like broadly for 2016? Because 2015 was expected to be the year when growth shows up, but it didn't.
Well, you're not going to expect much better in 2016. In fact, you should expect it to be just at best an okay year.
Okay.
That's it. And
but they started off 2015 with perhaps more optimism, and there was a bit of a disappointment in store.
Yeah.
Do you think that the fact that most fund managers are being a bit more skeptical and cautious about 2016 can lead to a surprise on the positive?
From a usual approach, you're right. When you start off more conservative, you tend to have some more pleasant surprises along the way. But I won't count on it.
You wouldn't count on it. What are your key risks for 2016? Where do you see the trouble?
The trouble is, okay, look, the US is going to be all right. It's going to be moderate growth. It's not going to surprise on the upside, potentially a little bit on the downside, but moderate. Europe, moderate from where it is today, not much better. I think emerging markets still remains challenged everywhere that I can see in terms of economic growth. So I think, overall it's flat to down. What you have to watch this year is the dollar. The dollar is going to be key into 2016. If the dollar starts to take off...
Take off as in beyond 100?
Yeah, well beyond 100 on the dollar index. If the dollar goes up 5 to 10%, it's going to be very, very bad for a year. If the dollar finds stability around here or slightly higher, if it's just a range, +2, -2, -3, I think that's better for everybody. If the dollar really starts to get a bid, I think that's going to be very bad for emerging markets.
Do you think that much of the dollar rally has priced in a rate hike or two, and has the market also priced that in?
No, I don't think so. I think, the market's pricing in the first rate hike, but the market can't price in what the Fed's going to say. And I think the Fed could come out being relatively neutral, again, data dependent. I think that could make people quite nervous about where the dollar might go in 2016. And so I am not looking at a happy beginning of the year. It could get better as the year goes on, but I think that depends.
Okay, so if the dollar were to strengthen, and that's your base case scenario in reaction to a hike, what would that mean for the rest of the world? Because we're going to be looking at a weaker euro then, which is going to be good news for Europe because exports get a boost, and exports have been doing well in the region. Emerging markets,
markets, there's a spread. I think countries like India will be better off. I don't think much move in the Indian currency on the back of a dollar rally, at least a small dollar rally. I think some of the more commodity-driven countries that haven't adjusted as much, I think you've still got more downside. I think some Latin American countries may have more downside, particularly Brazil.
Right, but Russia, Turkey, Brazil, Mexico, a lot of these countries have reacted already.
That's right.
They've been under pressure.
I think Russia has I think Russia should be all right. India should be all right. Mexico should be all right. I wouldn't say the same thing about other countries like Brazil.
Right. Do you think the risk is as severe as there being a default by one of the emerging markets and that leading to...
No, not the significant ones. No, okay. I mean, no. I don't think you're going to have default surprises in the near term, no.
Right, so no ripple effects on account of that?
No. You may have corporate issues, but you won't have sovereign issues.
So corporate defaults?
No, I'm saying you may have issues with corporates. I think basically we've got a problem in the emerging markets in the world. There's too much debt.
Yeah.
Okay, there's too much debt out there, but the manifestation of too much debt is going to be slower growth.
No, so where are we in the deleveraging process so far? Because
No. I mean, I think in the US you've delevered. I think US consumers have delevered, for sure. I think, but if you're looking at emerging markets, nowhere. Not significantly, no.
My only question then is that if US has gone through the process of deleveraging at a consumer level, even at the corporate level, things have picked up. How much time before we can see the investment cycle kick in? Because that's where the top line growth will come in. So far, corporate earnings have largely been led by margin growth.
You might see some of that next year, but not significantly again. I think you're really looking, as boring as it sounds, you may look at a flat couple of years.
Couple of years? You're saying beyond 2016?
Yeah, a flat couple of years where markets sort of trade in a range. I'm talking about the optimistic case here. Markets trade in a range, the dollar moves up a bit. You see some investment spending coming back, both in the US and other markets as well, but not significant. So, you could really have a flat couple of years from an economic point of view.
Right. What about the liquidity environment? Given the fact that if the Fed hikes rates, there would be obviously a preference given to the dollar trade and perhaps U.S. equities, which are either ways overvalued, perhaps even debt in that market. Compare that to the differential policy stance that other central banks would be taking, where they would be pumping in more money, whether the ECB, whether it's the ECB, PBOC, or the bank in Australia.
Yeah, that's going to happen. I mean, that's normal. I think PBOC, is on an easing path still, gradually, not aggressively. I think for 2016, I think the ECB has made it clear that they continue to ease. Bank of Japan will probably do the same.
And that'll happen through 2016.
I think you should assume that the ECB will stay loose through 2016.
Well, when will, it almost seems there's a pattern that's being seen here. The US pretty much led the world into easing mode when the crisis hit and, providing stimulus to the economy. And now they are slowly moving towards normalization. Is that, in a sense, an indication that maybe a year and a half, perhaps even 2 years down, but that's the way forward for, that's the way that other central banks would follow too soon enough?
Well, it depends on inflation and it depends on employment. I think that job creation is an important thing, especially in the Eurozone. So I guess if you get the employment, you potentially get the inflation. Inflation will start to pick up next year because, year on year, just arithmetically, oil's not going to be down X amount, right? So you're going to see, where you're seeing 0, you may see 1. It's not going to be hugely inflationary, but so you will get the inflation pick up. But I don't think you'll find the growth and the employment pick up so dramatic in Europe as you had in the US, just because these are more restrictive economies from a regulatory point of view.
So the risk of deflation, you think it would be a thing of the past?
I'm not a deflation guy, I'll be honest about that, but I think that, if you look at the PPI in China, it continues to deflate.
Yeah.
So, China is exporting deflation.
And there is a struggle with prices.
Yeah, China is exporting deflation. I think, but it's rather than talk about deflation, I just talk about a situation where we have low inflation for a long time.
Mm-hmm. No, but the fact remains that deflation is something that the markets do not like because it's not very conducive for the economy. It's not very conducive for growth, investments. So to that extent, do you think if we are in a low price environment, with the inflation prints being lower, do you think that would be detrimental for the markets to move higher from here, and one has to really search for opportunities?
Yes, I think. Look, people are. If you talk about the equity markets, people are bullish Europe. They are cautious EM, and they're sort of. They've been long, or they've been bullish the US. I think all markets are going to disappoint in terms of the upside, right? I think you're going to have marginal upside in all markets potentially. I think EM is probably the most risky because even though EM has been a story for the last year, 2 years now, I think you haven't really shaken out all the excesses. What you can say is you can see these markets.
But primarily in the debt market?
Both in the equity market. I mean, equity valuations aren't cheap in EM.
Okay.
I mean, if you look at valuations in Asia, they're not cheap. I mean, China is relatively cheap actually. Most other markets, India is not cheap. Given that there's no earnings growth. There's no earnings growth anywhere. I mean, you look at earnings growth in the world today, it's 0. Right. Now, you could say that's going to pick up next year on the back of inflation. Yeah, it will pick up, okay? But you're starting at 0. So you may get 2, 3, 4% earnings growth. How much will markets go up on the back of that?
Okay. So you're cautious emerging markets, but my only question there is that, don't you think most of the news for emerging markets is also out, whether it's the fall in commodity prices, which for the commodity consumers has been a positive news, for the producers has been a bit of a problem, and then of course, the whole China angle, that's also pretty much been priced in.
Yes.
So my only question is, what would perhaps put more downside pressure to emerging markets? At best, don't you think they will struggle at the bottom?
I think you're right. I think when you look at commodity prices, you are as close to bottom as you can imagine. I think what would put more pressure on emerging markets would be a further slowdown in China or a mishap. And the mishap would come from a country like possibly Brazil. You need it to be a large economy, right? So I think Brazil and China could... for different reasons and in China it would be a bigger slowdown and in Brazil it would be a significant worry if things really did deteriorate. These could have a damper on emerging markets.
Right, the China worry, you think, again, the question is, yes, there's a problem in China, there's a slowdown in China, and the influence of the economy has been fairly strong. But do you think that will change because the government is pretty much putting the house in order?
I think the government's doing what it can. They're loosening monetary policy as fast as possible. They'll probably have a decent first part of the year. but there is a lot of debt in China, and these things take time to work out.
Okay.
So people can't just say, well, you're going to have 1-2 quarters of slow GDP and we're back to the races again. I think this is a several-year situation where Chinese growth is going to be challenged.
But they're easing the currency too.
Well, they moved on the currency. They haven't moved. I don't see any significant currency move in the near term. Frankly, I don't. I think that's 2016, 2017 possibly story. I don't see in the next 6 months.
Even if the yuan gets into the SDR basket?
Post SDR basket, you may have to look at things, but again, that's the next few months. Next few months, I think I think they want stability, and they've promised it on the currency, and they'll give it to the world. I think the currency is not an issue for me near term. Near term, very near term.
Is China an issue for you in 2016 as it was in 2015?
I think China's going to continue to slow down. That's just part of what you've got to live with.
How much more? I mean, they're trying to defend the 7% mark on growth.
Look, I don't know what growth really is. I'm not going to argue with 7 or 8 or 6. All I'm saying is that things are slowing. They continue to slow, right? And
are they slower than what's being reported?
I don't know.
Okay.
I just don't know.
Okay.
Yeah.
But the impact that China has had on, within the region, other markets, do you think that the pressure for those markets will continue, given the dominance?
I see. Look, I think if the Chinese move on their currency again, I'm not saying they will, but if they do move on their currency again, that's going to be bad for other markets, emerging markets. I think the big issue for China now, or for the world right now, is not so much how much impact will China will continue to have, it's the psychological impact of further China slowdown, if it happens.
Right. What about oil prices? What about base metal prices?
Oil prices
all
are
of that has pretty much
range bound. I don't see oil breaking down. I don't see oil breaking up.
So pretty much around the 50 mark.
40, 50, with potential spikes up even, but I don't see it breaking down to the people are predicting $20 oil. I don't see it.
Okay. Do you think the investment climate would change? Do you think business confidence would return if this is the bottom of the cycle? Then do you think that this is perhaps the year when you would see clear signs of companies investing, job creation, employment, wage inflation coming back in?
I don't see a bottom as being a turn. I see a bottom as being simply a bottom, and you could flatline for a while.
Okay.
So if you told me we're close to the bottom, I wouldn't disagree with you. If you told me a turn's coming near term, I would disagree.
Through 2016?
For sure. GST must pass.
Okay.
That's it. If it passes, great.
If it doesn't?
Bad. This is a cornerstone reform. This is like the European Union. This is like a single currency market, right? That's the equivalent. You got to think about it. Setting up the EU, setting up GST in India.
Okay.
It could be a big boom. Boom.
What about India? I mean, how have you looked at the India story? Every fund manager I've spoken to prefers India in the emerging market space, and that's a well-known story, that's well documented.
Yeah,
But where does the story go from here?
Look, when you talk to people of India, and I think you talk to people who are much more knowledgeable than I am, I try and distill it down to one thing. GST must pass. GST must pass.
Okay.
That's it. If it passes, great.
If it doesn't?
Bad. It's bad. It's not bad for the market so much. It's just, this is a cornerstone reform. This is like the European Union. This is like a single currency market, right? That's the equivalent. You got to think about it. Setting up the EU, setting up GST in India.
Okay.
It could be a big boom. Boon.
But do you see that happening? I mean,
You know better than I do what the politics are, right?
Yeah, because there is a logjam in Parliament.
Yeah, but this is something everyone must sign up to because this is good for the country. It should not. This should be a cross-party line. This should be just for the next 10, 20 years. This is a fantastic thing if we can make it happen.
Okay, the government is of course committing to the implementation of GST, but aside of that, broadly, how would you rate the government's performance so far at the centre? Because it's been 1.5 years, and it may be a bit premature, but the markets, the press, as also investors, are pretty much evaluating the government and what they've done so far.
Look,
they have a 5-year term.
No, I know, and I think part of it is just the overconfidence that the market had in terms of both how much and how fast the current government could deliver. So I blame much more the market and commentators for their optimism. than because the government's done a particularly bad job. I think they're plodding along. They're doing good things overall. I think, and they've got 5 years, like you say. I think the market went crazy, and the market's coming off now. It's kind of the equity market's been coming off, and you can't assume that a new government comes in and within 6 months it's going to solve all the problems. They're not going to do that.
So 9,000 was exuberance for the market, irrational exuberance, as many believed. But what is a fair range valuation-wise for India?
Look, I think markets will probably hover between +5 if the GST gets passed more to maybe -5, -10.
Okay.
Because there's no earnings growth. I mean,
Where do you see that coming in? You think a lot of that depends on GST clearance?
I think part of that depends just GST clearance. Part of that depends on how, the IMF predicted 7.5% for next year.
Yeah.
That's optimistic. Look, remember one thing. When people like to compare India and China all the time, but really there's no comparison. The Chinese put a lot of money in infrastructure in the last 30 years. India didn't do much.
India is seeking capital, though.
Yeah, they are, but this story is like watching a movie for the 5th time. Right? I mean, I'm not saying they won't get it right this time.
Yeah.
I'm just saying, and I believe in infrastructure as a concept and as an investment. I just think that you've heard this story before. You've seen this movie before.
You've seen this movie before. And I remember talking to you 2 years back when you had said that, the government needs to be creative with their reforms.
Yeah.
Perhaps, especially in the PPP model, there needs to be some sort of part guarantee given by the government that, this much is assured returns.
They haven't done that.
Okay.
Did they?
But
Did they?
No, that's true.
Yeah.
But do you expect that this government is, at least working in that direction?
I think they are. I think you've got to give them a shot. I mean, you've got to give them not a shot, a chance. You've given them a shot already. You've got to give them a chance. 3.5 years left. I think the focus right now must be GST. Get GST done, create a single market for goods and services in India.
Yeah.
That'll continue to push infrastructure and other things down the road. And I think that'll happen. I think that needs. So that's why I say this should be a cross-party initiative. People should put aside their differences and say, okay, this is good for the economy for the next 10, 20 years. Let's just do it. Everything else is noise. Because if you talk to a fund manager, look at India, there'll be 20 reasons why to be bullish and 5 reasons why I want to be bearish, and I frankly don't care. My thing is get GST done.
Right. What about the DISCOM issue? What about distribution of power? That's also very integral to infrastructure.
Yeah.
Do you think that a breakthrough there would also help?
Possibly, yes. Again, that's something I haven't focused on that much. But I agree with you. Yeah, don't disagree. Breakthroughs are important.
Breakthroughs are important. So far, in the 1.5 years that the government has been in office, any measure, anything the government has done in terms, they've opened up some sectors for FDI. They're looking at opening up more. They've been active on that front. Any measure that stood out to your mind as an investor that convinced you more about the India story?
Well, I think it had nothing to do with particular policy, but the fact the government's been much more open about dealing with the US, with China. All this is very good, actually. I think it's much more open door. And if in our sector the 49% approval was a big deal, which was negotiated, debated for 20 years or 10 years or whatever, finally happening. So I think the government's done well. I think the fact that better relations with China can help build a lot of the infrastructure India needs. If they want to.
If they want to.
Yeah.
For yourself, you're increasing allocations in India. You've been talking about that for a while now. Where would you look at investing?
Same infrastructure. If we get, but again, specialized infrastructure. I'm not talking about building
equity, debt, which way?
Either way. And not so much roads and bridges, but just infrastructure. It could be schools. It could be hospitals. It could be things that people don't think about when they think about infrastructure, right? Things like that. That's infrastructure.
What about ports?
I haven't seen anything.
Okay.
I haven't seen anything yet. But, we look at both things.
Because largely India's been, not so much an investment-driven story from an investor standpoint. It's been a consumer-driven story.
It has been.
Yeah, so consumer discretionary, non-discretionary. We've seen the auto numbers do actually very well.
Yeah.
Even in an environment where growth has been tough otherwise, you've seen passenger car sales, go through the roof.
Yeah.
We look very strong. Commercial vehicles, a company like Ashok Leyland has been reporting good numbers.
Yeah, very good. Yeah, no, I saw that. I saw the trucks and,
exactly.
It's a very good sign. It's a very good sign for the economy.
But then one wonders where's the gap, right? Because if the headline numbers are not showing that kind of growth, if you have the WPI running in negative, there's underutilization
But
of
if you want to be optimistic, you say it's coming.
It's coming.
If you want to be optimistic.
You see the growth in passenger vehicles, the increase in demand for commercial vehicles, the replacement demand coming in as an early sign?
First stage? Typically that is in an economy. When truck sales go up, that's usually a precursor to better economic numbers. So, based on that, you'd say yes.
What about the financial sector in India? Banks, they've
Well,
been...
there's the private and the public sector.
Yeah.
The public sector banks a lot of NPLs. They've got to sort it out. That hasn't happened yet.
But the government is committed to doing that, right?
No,
They're
they
trying
gotta
to
do
fix
it. Yeah, they've got to do it. They'll do it. I'm confident they'll do it. But like everything else, it takes time. I mean, the issue is that, there's politics, there's employment, there are a lot of other issues that you have to take into consideration. So I think they'll do it. But it's not going to be quick. It's not American style.
Okay, so you largely for investors, the bet would still be the large private sector banks.
Yeah, but they're not cheap. But I think the market's not cheap overall. I just don't think the market's cheap.
So if you are, which you are, invested in India, then you stay put. You do not increase allocations unless the market comes down.
Yeah, I think, look, from a purely...
Because we're at about 14, 15 times, which is okay from 1 year forward earnings standpoint.
Yeah, but there's no earnings.
Yeah.
Right?
But you're expecting earnings to kick back.
One hopes earnings will come back. But, the thing is...
You
it's
think
not,
20... Sorry.
Look, I think my issue is this, right? Everyone loves India. That means everyone's got waiting in India.
Yeah.
And so who's the incremental investor? I mean, the fact is everyone loves the India story. Everyone's been overweight India versus other emerging markets.
Yeah.
It has proved to be a good defensive investment, actually. I mean, generally. So I'm not criticizing anyone who's overweight India, but, you're not making a lot of money being in India right now.
Okay, but you think that can change if earnings came back? And that's not my question. Do you expect that to happen in
GST,
FY17?
GST.
Okay, GST, that's where you rest your case.
That's GST.
Okay.
If you want India shining, you want GST.
Okay, fair enough. So as we wrap up this
Yeah.
discussion, Nikhil, give us a big picture for 2016. As somebody who oversees a lot of money, where would you be allocating more in 2016? Where are your opportunities? Where do you spot your
I would be
top three?
generally I'd be optimistic, but very cautiously. Very cautiously. I'd say the most interesting things that I can see on the horizon are again Chinese equities, now that they've come down a lot. On the equity side, potentially opportunities in Europe, right? But overall, the investment has to be. You've got to be much more. You have to work a lot harder to make money. I think that's the message I'd like to give. And also private market stuff as opposed to public markets. So if you have private equity or private market transactions, they'll be probably better. What I'm trying to say is investing from a 5-year point of view is best done through private equity.
Okay, right now.
Yeah, it's best done through private equity. And if you have private market transactions, they're much more interesting, whether it's on the equity side or on the debt side than the public markets. Public markets are going to stay volatile.
Okay, and in India, any top bet, any investment opportunities still, or is it
GST.
GST? Okay.
If GST passes, go long.
Go long. Okay,
Yeah.
fine. On that note, Nikhil, thanks very much for
thank
speaking
you.
with us and
Pleasure.
giving us your perspective for 2016.
If the reform is seen to be continuing, that is, I cannot overemphasize how important that is for international investors. They really like that, to see that change coming through, so that the supply constraints to growth in India are being addressed, and infrastructure being a big one of those, but also the creation of an internal market, which the tax reform will do. So those things are seen as extremely important for international investors.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.